priceaction.com. Today I would like to show you a price action signal that is traded by professionals, and it's basically called an inside bar. Um, the way to trade inside bar, first of all, I'll explain you what is an inside bar. Inside bar is basically a set of bars where you have a mother candle and a baby candle, where the highs and the lows are within the mother candle. So that is called an inside bar. The way to trade inside bar is basically you take in the direction of the trend. If the trend is up, you want to take the trade or the breakout of the mother bar, and then your stop loss should be on the low of this inside bar. Okay, so that's the best way to trade this inside bar. But there's a lot of confusion because inside bars form everywhere, and the way to trade inside bar can be a little confusing. But the best way to trade inside bar is, number one, when you have a trend that has just recently started. For example, the market was moving down and it pushed back up. Okay, and then secondly, you have for example, market came up and came down and then it cracked this resistance. Okay, and then over there, once it cracks, it forms an inside bar that is kind of holding above the resistance. So that is another kind of inside bar pattern that people use. And then what you do is you take the breakout of this and then put your stop loss below this. So these are the two ways to trade inside bars. So I'll show you a couple of spots here. I'm looking at a euro grade British pound pair, and I'll show you the couple of inside bars that happen here. So let's look at this sample of data here, which a lot of people would have confused as to how they would have traded it. Okay, so if you look here, the market basically came down, okay, pushed back up, again came down, so it was a rejection here, pushed up, came down, and then came down again. And over here, what happened, notice what happened. This bull breached this bar, and also it breached this high, and then again there was a rejection. The bears kind of trying here. Okay, as you can see, the bears were trying here, but once the bears tried, what happened after that? You had an inside bar. Okay, so what does that mean? So that means this price, this high, has been breached. So this level right here, as you can see, the prices are holding above this level. I'm looking at a daily chart, by the way, so this strategy is only applicable on the daily time frame. So this is an inside bar. So the way to trade this inside bar is basically you take the high, you take the breakout of this mother bar, you put your stop loss below this, and you're basically, the next opportunity is the retest of this high or the retest of this closing price, which is somewhere around here. Okay, or you could do simply 2 times the reward, which is 1, 2, which your target was hit right here. So that's the number one way to trade an inside bar. Okay, so moving back here, I'll show you another good inside bar that formed here that you could have traded as well. So as you can see here, the market came and then there was a good bullish rejection. So this was good rejection, and then market came up here, and over here there was a rejection, uh, and then bears again pierced it. Okay, and then once this level is breached, and as I told you here, like, if you have this if you have this level, for example, and the market comes down and breaches it, and right after this breach you have this inside bar, that's the time for you to go in the direction of the trend. Okay, so that's exactly what happened here. So you have this inside bar that breached it, and then what do you have? You have an inside bar here. Okay, and in fact this is a very powerful signal. What happened here the next day is the market pushed higher, broke the inside bar here, broke the high of this inside day, and then came down. So this is actually even more powerful signal. So the way to trade this is basically you take this signal, you put your stop loss here, or you can put your stop loss above this. You can write the pair for 2 times or even 3 times the profit right here. Okay, so that's another trade here on the Euro Great British Pound. Let's look at some more examples here of inside bars and how they worked here. Another beautiful opportunity here I can show you. As I told you earlier, is you have a breakout. Okay, you basically, what market does is come and crack this high. Okay, once it cracks, an inside bar forms. Okay, and the way to trade this inside bar: breakout, stop loss below this, or stop loss below the mother bar if this range is really small. Okay, and this is what happened here. So you had this strong rejection, market came, well, this was an inside bar. I would not have traded it because we don't know which way the market is going to go, right? So it cracked this. As you can see, this bullish body cracked this high, and then right after the crack you had this inside bar. Okay, and then actually what happened after this inside bar is you had this, it's called a Hikake pattern. You have a false break of the inside bar, so that means the market pushed down, pushes back up. Okay, and this is even more powerful signal. And then next day again market came and pushed back up, so that means this price is not acceptable to the market. Okay, and how do you trade this pattern? Because this is an Hikake pattern, you can actually trade the breakout of this inside bar, put your stop loss below this, and you can ride your market for at least 2 or 3 times the profit. And in this case the market just went up. Okay, so that was one trade. Look here again. So this was the crack that happened. Market pushed, came back, tested it, pushed, cracked this. Okay, so crack this high again. What happened after this? Inside bar. And the way to trade inside bar, as I told you, you take the breakout of this, you put your low below the mother bar or below the inside day. In this case it would not have worked on this, but if you would have put your stop loss below the mother bar, you would have been fine. And then how do you trade that? Actually, because it's an inside bar and then you have a false break of the inside bar, I would not have traded this as an inside bar, where you take the break of this. I would have actually traded the break of this inside day, because this market came back and shimmied up, and I would have put my stop loss below this. I would have been absolutely fine if I would have traded this way. And then you move your market to at least 2 times the reward. Well, friends, this is the way you trade inside bars. Um, you don't get beautiful inside bars all the time. As you can see, this market is choppy here. There's no inside bars, good ones. There's good tails coming here. And actually, I took this trade when I saw this inside bar with the rejection on top. So what I did is I took the 50% of this, and what happened next day is market actually came up, did a false break. As you can see, the market came up, did a false break, and shimmy down. So that's a very powerful signal to take a trade. And I exited my trade right here, and then looks like there is another inside bar that is forming today. So and then this is a live candle, so I don't know what's going to happen here. If this forms an inside bar because this low has been breached, I would be interested in taking this trade as well. And then how would I would trade? Probably I'll put my stop loss somewhere around here, and maybe come back and retest this level. Market would come back and probably retest this level. So that's how I would trade this inside bar if it forms here. Anyways, guys, this is how you trade inside bars. If you have any questions, feel free to email me. I'll be happy to answer the questions. But in the meantime, enjoy this video, and you know, keep an eye on the inside bars. This is how the professionals trade. And one more thing I wanna touch base before I actually exit my video is that when you trade inside bars, you don't want to trade inside bars when they are like really high up. You know, when the market is like really coming down. For example, here, you know, like you don't want to trade this inside bar because right here, that's an inside bar, okay? But you look at this, like the market has come so much down, and we are back into this resistance. You want to take this inside bar as a trend continuation? No, you want to take this as a trend reversal, and this is exactly what happened. Like you know, you had an inside bar, market came down and pushed back up, so that's a false break of the inside bar. So what you do is basically you take again your 50% of that, put your stop loss below this, you can erode the pair, but that's another different strategy altogether. But guys, so don't take inside bar when the markets are overextended, okay? Because that's the time when the things are gonna turn, and you don't want to take inside bar as a trend continuation. Okay, look here again. Just this is everywhere. You know, if you just pay attention to it, you know, you will see that it happens time and again. Okay, well, this was the resistance level. Okay, but as you can see, the market gapped. So this was a gap. So gaps also form resistance. So bullish rejection bar, and then right after that, look at this inside bar. Even after this, another inside bar. Okay, and how do you trade this inside bar? Like I said, you trade this inside bar because you see this is a false break of the inside. You take the false break, you put your stop loss below this, or because this is such a large body, how would have traded is you would have traded 50% of this, and you would have ride your market right here. That's how you trade these inside bar for really good risk to reward. Anyways, guys, this was my analysis on inside bars. Feel free to subscribe to my channel and gives me a thumbs up if you like the way I'm trading inside bars. Take care and happy trading.